Debra has over 40 years experience providing nonprofit development services. Ms. Jackson has a talent for helping nonprofits and faith-based organizations increase their capacities, programs, training materials, and fund development plans. Debra has a master's degree in leadership and management, and she's also currently pursuing her doctorate degree. I know Debra. I met her. She attended one of my grant writing classes, and we started to find out we had common connections. She worked with LA County Community Action Board. If you remember, they were the original community action poverty groups. And so a lot of experience that can help some of you navigate. And she put together some really good, simple to understand tools that we can use as we do this work. So I want to pass the mic to Miss Debra Price Jackson. Debra, it's on you.
Good morning. Good morning, Cheryl, and good morning, everyone. I'm pleased to be here this morning, joining you on this presentation. And like Cheryl, thank you for coming out early on a Saturday when you could be doing other things like sleeping in. And to hear about financial management for nonprofits. And I'm going to take over the screen here and put my presentation up. Let me get it set up here. Here we go. Okay, there we go. And one of the things that is so true about what Cheryl said, I have a passion for working with nonprofits. I've been doing this for well over 40 years. And I was responsible I worked most of my time for the community action agency that was in Riverside County. And during that time, I helped create an academy that we provided to the community nonprofits that trained them how to build their infrastructure. And one of the things that we have always told people is that simply because you're a nonprofit doesn't mean that you're not a business. And you need to function like a business and good business management in order to be successful. So one of the things that before we start, I do want to mention is that I have gone through the materials that you're going to receive and review. And I've taken a lot of time and research to make sure that the information is accurate. But I am not an attorney or a CPA. So the information you're going to see isn't legally binding. If you want that professional, legally binding advice, I recommend that you contact an attorney that specializes in nonprofits. Or a CPA that specializes in nonprofits to be able to get that information for your specific situation. And as Charlotte mentioned, I do have some resources of some really fantastic firms that could provide assistance to you if you are looking for those relationships. So what we're going to talk about today is what is financial management? What does that mean when we say that? Who is responsible for what? Budgeting, compliance and reports, and my favorite, audits. I don't know how many of you guys have experienced audits in your time of working with your nonprofits, but they are a part of the real world. And as a business, you need to be engaging in those. Now, this is a wealth of information. And I've tried to drill it down so that we have just 45 minutes to be able to review. If I'm going too fast or you have questions, please feel free to put them in the chat. Cheryl is going to be monitoring that, and we'll stop every once in a while to review the questions. Or if you want to catch me, just unmute yourself and say, "Hey, Deborah, what do you mean by that?" Or could you repeat that? There's not a problem with that. So feel free to do that, to unmute yourself if you need to ask a question. So what is financial management? Financial management is basically the planning, the managing, the controlling, and the evaluation of finances and economics structure of an organization. And like I said, even though you're a nonprofit, you are still incorporated as a business. What is accounting? How does it differ from financial management? Well, accounting is the hands-on process, and there are nonprofit accounting standards that are set up by the government. It's about record keeping, everything about paper, and in this age, digital. And it's basically your assurance that your debits and your credits always balance. So if you don't have financial management, what does that mean? What are the risks of not having financial management? Well, you have the risk of fraud. If you don't know what people are doing who's managing your money, how do you know when they're not doing something inappropriate, when they're doing something inappropriate? Mistakes and bad records. Mistakes happen. People transpose numbers, and all of a sudden, you go from being in the black to being in the red. Or bad records that a donor calls and they want an accounting for their donations for the past year, and you have no records of it to be able to present to them. It also could be loss of integrity with the public and with your donors. I don't know if you guys remember, I'm kind of dating myself here. If you remember the time when United Way was in a lot of problems, the National United Way, for how they were managing money and the salaries that their executives were receiving. Well, United Way took a really big hit on their reputation behind all of that. And it also kind of impacted other nonprofits because the public and the donors started questioning, what are these big nonprofits doing? And it has taken a long time for United Way to regain that reputation. Your reputation is one of the most important things that you have going for you, particularly in having people support you. And you don't want the lack of financial management to threaten that. And then it doesn't take much for people to want to file a lawsuit against you. You may have a donor who had a restricted donation, and maybe they wanted it to go to your after-school program, and you applied it to the food pantry, and they turn around and sue you for misuse of their funds. Those kinds of things do happen. So the financial management means that with the oversight you have, you can protect yourself from these particular things. So it's always important to have internal policies and controls. These are basically your rules or relationships for how you manage your money. And the rules and relationships keep you out of fraud because it's your checks and balances. Is so that your left hand knows what your right hand is doing and vice versa. And the policies help you follow and account for the money. Now, one of the things that you will have available to you is a template of internal policies and controls that if you don't have anything written right now, you could use this template to create it, or you could use the template to make the policies that you have right now even better. Who is responsible for what? The number one thing is that your board is the governance of your organization. They are the ones who set the policy and set the direction in which your organization will go. And the board, in the work that they're doing, have 30% of the work to deal with your financial management. And then you have staff. The staff have the hands-on, and it represents about 70% of the work. And then you have external auditors. They are your ultimate check and balances, and you use them as you need them. So let's go back to the board and what they're responsible for. They are responsible for governance and oversight. They make the decisions, especially the financial decisions about your organization. They have a conflict of interest policy to ensure that no one thing within the organization is getting favor because someone on the board is benefiting from it. They also are responsible, they're legally responsible for all grants and contracts. Therefore, they need to know in advance and approve in advance any grant that you're applying for and any contracts that you're signing. One of the things that you want to make sure is that it's recorded in the minutes. Right now, just an aside, right now, most funders, when you're applying for a grant, will ask for the board minutes that approved the application. They want to know that the board is aware that you're applying for this grant. They're responsible for fundraising. They prevent fraud and mismanagement and illegal activities. They do the financial planning, mostly in the way of a strategic plan. So your three officers on the board, you've got the president who offers the guidance and authority in terms of the financial management. You have the treasurer who's responsible for financial reports. Now, the treasurer may do the reports themselves, or they may get the reports from your fiscal officer in your organization. But they're the ones, the treasurer is the one responsible for making sure those reports get to the board. And then there's the secretary. The secretary takes detailed notes for minutes so that all of the transactions that happen are recorded. The nuts and bolts of the financial management actually really comes down to the staff. And they're responsible for the daily management, the trackings of the ins and outs of the money, taking in the revenue and paying debts, and generating the fiscal reports. They are also responsible for filing IRS and state annual reports. And we're going to talk about what those compliance reports look like. And they prepare for audits. They get all of the financial materials together for an audit. Your auditors are generally an external, unbiased, objective entity that will come in and take a look at what your finances look like. And it's important that they don't work for the organization so that they can have that unbiased view. They're hired by you, but they're not like staff. And we're going to talk about audits more towards the end of the presentation. So just a reminder about boards, because they are so important. You need a minimum of one board member for your nonprofit. And you can actually have staff on your boards. A lot of people don't realize that their staff can be a part of their board, but no more than 50% of the board can be staff or related to staff. And then no more than 50% can be related to each other. So if you had a board of 5 people, you can't have husband, wife, son, daughter, mother all on the board. It can't be more than 50%. And then you have to have the following officers: president, secretary, and treasurer. Now, the president has to be a board member, but the secretary and the treasurer do not have to be a board member. And so this may be helpful for staff coming in and supporting you. We recommend that you have an odd number of board members to avoid ties, and you must meet, this is a California regulation, you must meet at least once a year. And now in the days of Zoom and virtual meetings and things like that, you can have these as virtual meetings. You just want to make sure that communication factor is written into your bylaws, included in your bylaws. So your finances and the management of it is as strong as your budget. And the board has a role in the budgeting. There's a role of the staff. And your budget should support your strategic plan. If you do not have a strategic plan, it's time for you to start thinking about doing one. And you can get a consultant to come in to help you design a strategic plan, or take a workshop to learn how to do this. Is something that's done with staff and board, and it guides your organization in its vision and its mission. And you need to create an annual operating budget, and you need to create a budget for each of your programs and services that you offer. So if you do after school tutoring, if you do mentoring, if you have a food pantry, if you do elder care, all of those different things in the community your organization offers, you should have a budget for each one of those services. So your strategic plan outlines where your nonprofit is going to be in 3 to 5 years. That's generally the time frame for it. And it outlines your nonprofit growth. If you want to double your earnings or triple your earnings over the next 3 to 5 years, so that you can grow your programs or add additional programs. And the budget needs to support that growth. The budget is, as I mentioned before, is prepared by staff and approved by your board. So I'm going to stop right now and see if there are any questions. Cheryl, are there any questions in the chat? Are you there, Cheryl? Okay, I guess not, and I'm not hearing any questions. So just want to move on with budgets. There are 2 types of budgets that you should have. There's an organizational / it's also called operational budget. And there's the program or service budget. So for your organizational budget, that's where Your administrative costs are reflected. These are basically, say, staff that work for the organization and not specifically one program. It's your overhead costs, is what keeps the door open. In order to run your business, you need to be able to pay for this particular service or cost. They should be realistic. You should research them and what would it cost for you to have this service or equipment or staff today. And you can look at your historical cost. This is where the record keeping is really important, because you can see what you've been paying over the last few years to be able to project what you might be paying over the next 3 to 5 years. You also need to incorporate your critical expenses that may only occur once a year or every 2 years. You have things like liability insurance, both for the organization and for your board. And you have to pay for those third-party audits. And these are things that don't happen every month. They may happen once a year or every 2 years. And so you want to make sure they're incorporated in your budget, not forgotten. Now, when we talk about the program and service budget, these are your individual programs. Like I was mentioning before, maybe you have an after-school youth tutoring program, and or you have a food pantry, or you have a senior care program. And each one of those has its own budget. And when you put all of those together with your organizational budget, you've got a complete picture of what your organization is bringing in and expending in the way of how you've planned it. It's pretty much like your own personal budget. There are 3 parts to these program service budgets. They also are included somewhat in the organizational budget. Usually the most top-heavy part is your personnel costs. And these are people on payroll. If you have, say, for instance, consultants or contractors, and you're not paying them through your payroll service, they come under what is called the direct cost. And the direct costs are costs you have only because you have this program or service. If you did not have the after-school youth tutoring program, you would not have the cost of the tutors. You may not have the cost of maybe the school supplies that you package up and give to the kids who need the tutoring. There may be other things that you do for these youth that are exclusive to this program. That's what a direct cost is. An indirect cost is shared expenses across all of the program. So it could be the executive director's salary. Maybe you have 5 programs, and every program shares 20% of the cost of the executive director's salary. It could be your payroll costs. It could be your audit costs or your liability insurance. Those things that are shared across each program. So a lot of people ask, how do you pay the executive director? Where does that salary come from? Can you include that executive director in a program budget? Well, you can include the executive director as an indirect cost because executive directors spend most of their time administrating the organization and not any time in a specific program. But sometimes you do have an executive director that has professional qualification that will spend a certain percentage of their time in a program. So, say for instance, you've got a program that mentors youth who have substance abuse problems and they need mental health counseling or substance abuse counseling. And say, for instance, the executive director is a licensed clinical social worker, and they spend 25% of their time counseling youth that are in this program. Well, 25% of that executive director's salary can be applied to personnel cost under the program cost. This is particularly important when you go to apply for a grant, because not always can you include the indirect cost in a grant application. It is strictly up to the funder whether or not you get to include that. But if you're able to write some of the services of the executive director into that program, you can include a percentage of their salary. The other thing I forgot to mention about those budgets is that on the personnel, don't forget benefits. You want to make sure that you incorporate the cost of that, which includes, the taxes that you're required to pay, everything that it costs to have that person on board with your agency. There are 3 financial reports that you're going to need. Or let me put it this way, they're highly recommended. You find this mostly in the for-profit world, but the nonprofits should have these. And typically you have your fiscal officer or your CPA prepare these. You have a statement of financial activity. Now, in the for-profit world, it's called a profit and loss statement. This statement of financial activity is not a profit and loss, because for nonprofits, you don't make a profit. Any money that you earn, any income that you earn through your nonprofit, say a fee for service, maybe you've got a business that is organized by the youth and they sell products. The cash returned from that income all go back to support the support your nonprofit. They don't get shared by the board or any staff or any one person. They support the agency as a whole. And the statement of financial activity, its main responsibility is to give insight into your organization's income and debt management. Are you able to stay ahead of your debts? Are you paying your debts? What is your, income looking like as living, paycheck to paycheck or grant to grant, or robbing Peter to pay Paul in order to make sure that you make payroll. A balance sheet is a statement of financial position. It's your total assets minus your liabilities. So your net assets are what you have, what is invested, and what is deposited. So it's your cash and your non-cash assets, properties, investments, non-cash donations that you have, maybe for silent auctions that you haven't auctioned off yet, and grants that you have or that are coming in. And liabilities are what you owe to other people or that you're holding for other entities or other people. So your cash flow statement shows how much cash is generated and used during a given time period. The important thing to know about the cash flow statement, it is a snapshot in time. It is a picture in a month, a quarter, 6 months, or a year. And it lets you see at a glance how cash moves through your organization through that particular time period. So now we're down to talking about how do we make the IRS and the state of California happy. Most tax-exempt organizations must file an annual information return. And if you're unsure of whether you need to file one or not, you should consult with your attorney or your CPA because it really varies by the type of organization you are. And the type of form you file depends upon your gross receipts and your total assets. A reminder is that your gross receipts are the total amounts received from all sources, your cash and your non-cash, during your tax year without subtracting any cost or expenses. So is all the donation, is all the grant money, is all the business income, the fee for services. A good example of a fee for service is if you charge for daycare, or if you charge for counseling and it's on a sliding scale. These reports for the feds are called 990s. So for a 990, that's a full 990. It's sort of like your 1040 for your personal taxes, along with the attachments, schedules. The gross receipt, if it's greater than $200,000 and your total assets at the end of the tax year is greater than $500,000, then you need to file the full 990. If your gross receipts are less than $200,000 and your assets are less than $500,000, then you file a 990 EZ. It's the easy form of the 990. If your gross receipts are less than $50,000 during the tax year, you file what is called a 990N, or it's an easy postcard. And it's a really simple thing to file. These are all filed electronically. It's an easy thing to file. You do not have, on a 990N, you do not have to report your earnings, just that it was less than $50,000, less than the threshold. But you do have to report it. You do have to file it. If you don't file it and you miss 3 consecutive years of filing any one of these that's appropriate for you, you will automatically lose your tax exempt status. This is something that the IRS is doing. Usually they will send you notice that you're about ready to lose it, that they haven't received it. But in that 4th year, it is automatic. And revoking it means that you are no longer a 501c3 or a 501 whatever tax exempt organization with the federal government. The other important thing to filing a 990 is that 990s are open to public inspection. And a lot of major organizations, corporate donors, family foundations, or even the government will go to different sources to review your 990. They want to see what your financial health looks like. Are there other people supporting your organization? Do you have enough cash flow to support the activities that you say that you have? It's a good snapshot for a potential donor or funder to look at. So you definitely want to, just from that perspective, have filed your 990. So generally, it's your chief financial officer who completes the 990, but the board needs to also approve it. So you want to make sure that when the tax year is coming up and you have to report it like April the 15th for the calendar year, that your board is available to vote on the approval of your 990 before it gets submitted. So what about the state? What reports do you have to submit to keep the state happy? Well, the state is the same as the IRS. It's just that their forms are called 199s. So if you have gross receipts more than $50,000, the state is a little less. If you have a gross receipts more than $50,000, you need to do a 199. If you have receipts less than $50,000, then you do the 199N or the e-postcard. Every 2 years, you are responsible for filing a statement of information, which is called an SI 100, with the Franchise Tax Board for California. And basically what this is looking at who the officers are of the chief officers are of your board, your executive director, who's responsible for getting financial reports from the state or financial information, communication, correspondence from the state. And it's just updating this information, but it is required. It's not something that's optional. And again, just like the feds, if you don't file the 199 after 3 years, you get revoked. And it's also revoked if the IRS revokes you. So they work hand in hand. So one more thing that should be a part of your policies that a lot of nonprofits overlook are gift acknowledgement requirements. If you have a single gift that is $250 or more, you're required by the IRS to send a written acknowledgement to that donor that identifies that gift. If it's an in-kind gift, which is non-cash, say for instance, someone donates a piece of artwork to be sold at a silent auction, and the artwork has been appraised at $500. The donor dictates the value of the gift, not the nonprofit. It is the responsibility of the donor to provide you with that value. And it's between the donor and their CPA to deal with the IRS when the donor turns around and takes a charitable deduction on their taxes for that gift. They have to validate the value. So what you do in the gift acknowledgement is you acknowledge what the value of it is by the donor. It's like the fair market value of what that gift is. If you went out and paid for that piece of art and paid $500. That's what the fair market value is. Now, if you sell it at auction and you get above the $500, well, then it's whatever is above the $500 that is the charitable gift on this particular item from the auction. Where people run into problems is when they have dinners or events where they sell tickets. And I know that from, I've been members of a lot of nonprofits, and we've had like annual dinners, and maybe the tickets are $50 and or $100. The tickets are $100 for the event. And someone who buys the ticket will write in the memo field of their check, donation. Well, not all of that $100 is a charitable gift. What you have to look at and what you're responsible for as an organization is you need to let the donor know, the ticket buyer know, what the fair market value of that meal or event is. So say, for instance, you have $100 and the dinner is catered at $25 a meal. And that's basically the expense that you have for the dinner per donor. The value of that ticket, the donation, is only $75. Not $100. And you have to be very careful in acknowledging to these donors what their true gift amount is. The gift acknowledgement letters are generally prepared by staff, but your internal policies should determine who signs these letters. And it's usually based on the amount of the gift. So your executive director, of course, is going to sign for your major donors, letters to your major donors. And you establish what that gift level is. And then generally your assistant executive director, or maybe even the program manager, will sign for gifts of lesser amounts, but it should be written into your internal policy. Okay, so let's talk about audits. But before we talk about audits, just want to stop for a moment to see if there's any questions. No questions? And
I'll keep going. This is good.
Okay.
Good.
Okay. So we've got audits. Not everybody's favorite, but basically the audit is an examination of the financial statements and processes by an outside accounting professional to determine whether you are conforming to accounting standards. And remember, I said that the federal government has established accounting standards for nonprofits. So you may have 3 different types of audits. The first audit you should always have, and maybe once a year, do this. And this is your free audit because it's an internal audit. And it's generally conducted by the audit committee of your board. The audit committee is an ad hoc committee, which means that they only meet when they're required to meet. They're not like a standing committee. And the board reviews the financials, which are provided by your fiscal officer. So they're looking at bank statements, they're looking at your 990, they're looking at your reports, your receipts, your contracts, to make sure that everything lines up. You've got that check and balance. Independent audits are done by a third party. They basically do the same thing. They take a look at your financials, but they give a professional, independent opinion about the state of your finances and whether they meet those. They're called GAAP, the General Accepted Accounting Principles. The third party is not controlled by the board or the organization. You need to outsource this so that they're not influenced by the board or staff member, the fiscal officer, executive director. Independent audits can be pricey. They range anywhere from $3,000 to $5,000. This is why you don't, unless you're a major multi-million dollar nonprofit, you don't have this every year because of the cost of the audit. But it's good to have one at least every 2 years to make sure that your standards are appropriate and that you're not making any mistakes or open to fraud. A single audit is generated by the federal dollars that you receive. These are contracts or awards. And any single audit is generated when you have an aggregate of $750,000 or more in a single fiscal year. So it's not whether you get it from one federal source, like one federal grant or one federal contract, but you could have 3 contracts that add up to $750,000, and you are required to have a single audit. And this is guided by the federal government. And again, you generally want to bring in a third party to help you with these single audits. So I have put into the slideshow, which you'll get a copy of this slideshow deck, a recommended reading list. All of these books are available online. You can go to Amazon.com and get any of these particular books. So one of the things I wanted to do before we ask for final questions, I just want to show you the handouts that I have that I'm going to put this here. Okay. So one of the things that I hope, wait a minute. Sorry about that. I'm not, okay.
You lost it, Deborah? Did you need me to,
Yeah, I've got, whoops.
How's everybody doing out there? You can take a 2 to 3 minute break. Why don't we do that? It's 10:30 and we have about 40 more minutes, and we can have questions and dialogue, and we will be out of here right at 11:30. If you haven't put your name and information in the chat, please do. Don and Nicole are taking attendance. Deborah, I have all your forms, so which one did you want me to put in? You sent me like 6 things, so I can help you.
Okay, why don't we just put the forms up?
Do you want to start with the Propel or the Charity, or which one?
Any of them, because once you put it up, I can just explain what they are. So whatever's easiest for you. I'm just trying to get back to my full screen.
Sometimes that happens, I know, huh? That's what this virtual thing is all about, I tell you.
Yeah.
No joke. But it's coming right up. I have it. I'm just downloading and opening for you.
Okay.
Whew, this is the part I hate about my job is this money management, the record keeping. Almost as soon as you start services, I'm already thinking about, okay, how are we tracking this? Who's reporting? Because the penalties just outweigh the risk of not paying attention,
Yes.
So a lot of the things you covered, I think these directors here, this is good for them as they're growing. Like Jackie said, these are the people doing the work for real.
Yes.
So we just tighten up our organizations. Okay, I've got 2 documents open while you're going over these 2. I'll pull up the others. And then for everyone that's still here with us, thank you. We're going to do a raffle at the end, 2 raffles. So stick around if you stick around. Twin, you keep winning. You might not be able to win $50, 2 $50 raffles for those that stay to the end. And we're almost there.
Okay. And you took the T out of twin, and what did that say?
Okay.
Okay.
I'm following you, my brother. Okay, there you go, Debra. Here is the indicators of financial crisis. So how can they measure? Can you see that on the screen?
Yes.
Just tell me when you want me to go. Okay, and we'll send all these documents to you.
Yeah, I still don't know why I don't see myself, but as long as you see the documents, that's a good thing. Okay, so basically what you want to do is you want to know if you're in crisis or not. And this particular document is a checklist that you want your chief financial officer to run through and see whether or not your nonprofit is in a crisis. Financial crisis, and what you need to do to resolve it. A lot of times people don't know that they've got a major problem looming, and that they have a major problem looming and right under their noses. So this helps you do a check on it. Okay, so let's put up the next one.
Okay. You can use these for board meetings, staff meetings. These can help independent directors, self-made men and women. You can use these as your checklist to help you transition. So as you're going through your day-to-day, you don't have to create all these rows and line items. That's what we're trying to bring you. I think you're ready to do it, but where is my list? What's governing me? So this is how you use that. This particular form. And then I will go to the next one is getting ready. The audit checklist. Okay, hold on. Okay, Debra, I have the National Council of Nonprofits. The getting ready for the audit checklist is up now.
And this is a very helpful tool for you when you are establishing, say, an internal audit or getting ready for that third-party audit, an independent audit. And you go through and you look at, do I have these documents available? And if I don't have them available, where are they? Are they, you want to look at your minutes for financial decisions, of course, your bank statements to make sure that they balance. Any of the reports that we talked about, like any of the reports that we've talked about, the 990s.
The 990s are here, the tax returns, your invoices, vendor, everything. And I use it quarterly. And right now, because we're all peer-to-peer, I'm no different. I face these things every day. I'm realizing how much from 2020, we had to go back all the way to January, even before the pandemic, and make sure that everything is reconciling because we had remote locations. So I'm pulling in everything, and that's guiding how I'm working today because now I'm on top of it. Oh, it's only March. We're 3 months into the year. Everybody stop. I want to see every single piece of paper that we need to do our final year report. And now we're building the capacity week to week, month to month. And now we're not, it's not so reactive, and it's a better allocation of your time. So it's not like you're on retainer and then you figure out how to hurry up and get everything done. That's not what we're talking about. We're talking about how do you build the system. And the technology, guys, this is the insight that the $100 million companies get that we don't get. It's the insight to automate.
Yes.
So what we're learning, what we're forced to learn, this is the basic building blocks, the road map, the pathway to our self-determination. But it's about getting those skills, getting ready, just moving forward. So that's all I really wanted to say. I don't want to overemphasize it. You get it.
I would
really going to be the future.
Yeah. And one of the things that you want to learn that even in your own personal management, time is money. So if you have your staff prepare before the auditors come, you don't have them waiting for you to try to find stuff, and it's costing you money to do that. So preparation is good prevention.
I want to show some numbers, Deborah. Let's show the actual calculations. And this is an important part for nonprofits that we're often not taught. So we're always selling ourselves. We're selling what we're doing. And that's a skill set that we're going to have to learn how to pivot away from. What we should be doing is our process, our organizational structure, which is the resources, is really set up to listen. The listening campaign was one of the most significant skill sets that LA Metro, that we work with our new organizers and ongoing organizers. This listening, we're discovering what do the people need. We're listening for what's keeping them up at night. Where is it? And then in our faith-based sense, we're praying and meditating on that, constantly seeking that clarity. And it's automatic. Once you have a clear idea of what your customers' needs are, because you've been listening to them, not telling them what you can offer them. Different business. We got to understand that different business. That's not bad. It's just different. So customer discovery, these numbers, the pricing, what is the cost of eating food? What does it really cost us? What does it cost case management for a job seeker? What does it cost to engage 20 youth in a room and create a safe space for them to have arts and creative activity and technology, they can build and create? What is the cost for just a think day? So we're just going to create this quiet space for you just to come in here. You don't even have to quote unquote do anything, just sit and think. So this is also what I hope inspires you on the budget. Is understanding that pricing. What does that cost? So you want to understand your full-time equivalents from your part-time. You also want to understand how to use per diem and that kind of contract labor. And even though we're in a new AB5, there's ways to go about qualifying people for that contract work if they don't want to come in and be an employee. Being the employee brings the workers' compensation, insurance and risk activities and programming policies and procedures. So these are when you say, I want a contract, I want to be at the table, I want to lead. That's why I want you to understand the things that we need to do to compete. So you already have the program side. That's your core competence. Now we're going to build your organizational side and understanding what your customer wants, how they want it. These are just some formulas. You know that in a full-time work year is 2,080 hours. So just like, when you're rolling up something and putting together a team, those basic numbers. For nonprofit management, budgeting, all the resources, you got to have those same baseline numbers. So we're going to share this with you as a first step on just your personnel and how to organize your year, your programming into these quarters, because this is how they also build, and the refractions. And that's where your payroll comes in. Finding a good payroll company when you're starting out small. You may not be able to afford ADP from the very beginning. So there are other small automated companies you can use until you can grow into that. But these are the responsibilities, which is why when you're small, I think it's always good to do partnerships with larger organizations and take the subcontract. And there's two reasons I say that, because subcontract allows you, when it comes into your church nonprofit, it's unrestricted income. Your obligation is to deliver the service. So if you delivered the service for whatever, accounting wise, that's legal. You can do that. And so you earn unrestricted income to deliver a service that you know how to do, and the monies can be used to build your organization. So a 2 to 3 year plan and a good subcontractor relationship can launch a nonprofit from zero, $5,000, $10,000 grants to like $300,000 to $500,000. And with $500,000, $250,000, $500,000, you can have like 1 to 2, maybe 3 workers, not making a lot of money yet and not having a whole lot of activity, but it's enough for you to demonstrate that you could take a contract. That's about the level that contracts, that contracts begin with the county, the city, the state, or even foundation. So just to keep it in some parameters, we're all aiming for alternatives to incarceration. There's going to be invitations for new players, and we're hoping that a lot of them, some of them, will be these very people here on this call and in the CAP. And TPI team and management is actually rooting for you all. They want to see that happen. So this is another document, the 10 basic principles of financial management. Deborah, I put that one up for you.
I can see that. Yeah. And I just wanted to jump in about the calculations. One of the things, the reason why we created this was that we were finding that so many of our nonprofits were forgetting their math. And they were making a lot of math errors in their grant application when they were talking about their program design versus the budget. And so we came up with this, here's this simple basic math so that that there are 2,080 work hours in a year, and what that looks like part-time. So when you have your personnel line items, and you've got, say, for instance, your executive director is working, say, quarter time, doing mental health counseling, that's 25%, and that quarter time is 520 hours over a year. Then you need to assess, are they really doing 520 hours a year, which means they're doing 12 hours a week? It helps you understand the math connected to the actual action. Mm-hmm. And so we just found that this was very helpful for people who are math challenged, like I am, and trying to remember, what are these calculations? How do I do this? When do I round up? And you'll find in grant applications, they want you to round up. They want a whole number. They don't want cents when you're doing your budget and stuff like that. So when do you round up and when do you round down? And what are the different quarters? Remember, your quarters are based on the operating year, operating term of your contract, not always your fiscal year. So say, for instance, most federal grants are actually October the 1st through September the 30th. They're not January the 1st through December the 31st. So the first 3 months of the year is actually October, November, and December. So when you're talking about first quarter of your contract, you are not talking calendar year for a federal grant. You're talking about what their grant term are. Most fiscal years are July through June. And so if you're on a fiscal year program schedule, then you're looking at from July to September as your first. And if you're on a calendar year, then of course, you've got your January through March for your first quarter. Okay, so we can move on to the next one, Cheryl.
Okay, I will put up the next one to show. These are great, Deborah. That cheat sheet helped me early on, and now I have it memorized. So as soon as lighting, because how do we make sure we actually have enough to do this? It's hard because sometimes I have to turn it down. It's more, it's more to it. And then that's where I have conflict between my service mission and being a professional nonprofit. Like, that's why I appreciate the faith base, because when I can give, I just give, and then the nonprofit is sort of like how we professionalize this, but I do experience conflict. I don't know if anyone else ever has that feeling. Sometimes it feels a little weird.
Actually, I wanted to first thank you, Ms. Jackson, because this is like gold right now. This information concerning the requirements of what it is or what it takes for a nonprofit. And I actually had two of our board members was here, Joseph and Kimberly. And the thing is, we've been operating for the last 7 years. We didn't really, put this nonprofit thing together, but we had to fill the 990 and we had to turn in our paperwork every 2 years as necessary. And we requested for a grant writer because it is overwhelming to have a budget when you don't have the simple funding or the startup costs to actually implement the program. So I wanted to know afterwards if we can specifically get help for a grant writer and going over what we have been working on for the last few years. And the youth programs is number one. That's our main programming that we want to deploy. But we, like I said, we can't do it without the basic help of a grant writer and, some crossing the T's and dotting the I's help, but we pretty much, as lived experience, I don't know if Joseph and Kimberly probably would just want to say hello, but this is very, very important for us to know, and I thank you again.
Oh, you're welcome. It's a Cheryl and I working together. One of the things that I would do is refer you back to Cheryl, who is an excellent grant writer and has access to other grant writers. I think the most important thing that I can tell you in grant and having a grant writer is you need to communicate very clearly with your grant writer what your vision is and what are the services that you provide. You need to be able to outline what are the services. So it would be like Debra comes to you for services, and my first contact with you is this. And then you walk me all the way through the program to the end. What are all the steps? What are all the activities? Because if you don't articulate that with the grant writer, you end up having the grant writer write your program for you. And it may not be the program design that you want. And you may end up getting funded for services that you're not able to provide. So you have to communicate with that grant writer exactly what it is that you're providing, that they're writing the grant for. And to provide the information that they ask for. Just standard things that you have together. Have the history of your organization together. You know, a timeline. You said you've been doing this for 7 years. Well, in the start, what did you do? And then every year, what were the programs and services did
Exactly.
so that you have a historical guide to be able to prove to funders that you have experience. If you've been doing youth mentoring for the last 7 years, but you only talk about the last 3 years, boy, you're leaving out a rich history of what you've done. Whether it's been funded or not, it is the experience that you're trying to outline. And
we do have a brochure. We do have a timeline because policy and rules and regulations, legislative changes, those is what we focused on as well.
Good.
But I did, Kimberly and Joe, I didn't know, just to say hello to you, because this is the first time that we actually have a platform where we can discuss nonprofit importance.
Hello.
Yes, we have a program for you too, Mello. I'm sorry. Go ahead, board members. Excuse me, Kimberly. Go ahead.
Hello,
Welcome,
I'm Kimberly,
welcome.
Program Director of Kingdom Warriors Foundation. Nice to meet you.
Hello, Kimberly.
Nice to meet you. Welcome.
Yes, the program director. And Joseph actually does IT. He is our only board member that is actually overseas in motherland, Nigeria. So they're representing.
All right. Welcome, Joseph. Well, this is how we do it in Los Angeles. We form these team peer-to-peer learning circles. And I found those to be the most valuable because when you need help, you can reach out across the aisle. So Mello, yes, we do have a grant writing community that we've built in partnership with Cherie Franklin and the Urban Design Studio Resiliency Center. So I'm going to put that up. That's where you can access us, and we're facilitating small new organizations through their fundraising virtually like this and bringing all the tools. It's got a membership base. So I'm going to show it to you, but I don't want to take up too much time with question and answers with Debra. But we teamed up. When you go to the website, you'll see these are all the strategic partners. You see Lamb there. And we all got together, invested to put together the software and build this platform. It's all by us, African-American professionals from construction, energy, policy, homeless services, everything you can think of. We're all here. And so you can join the membership. You would probably be interested in the nonprofits right here. So these are the main things that we can do. We have teams for construction, creative. You may also be interested in that team of consultants, culinary, because we're in partnership with a few of the large kitchens. and our hemp and cannabis, social equity work, nonprofits, real estate acquisition and development. And these are some of the best and brightest professionals in Los Angeles and nationally. So you can join the executive membership. I think it's like $4 something for the whole year. So you're talking $39 a month. We've made it super affordable. You're not going to find a consultant or anybody else in the church to give you these professional services. And we're here to teach you how to fish. If you can afford us, I can contract with you now. But we can charge high prices off the community market. I can charge the government those prices. But for you all, I wouldn't charge you the same rate. And this is part of what that pricing that we were talking about and having these numbers in your head. So we made it affordable for you, and we're going to train you, each one of your organizations, to really take this on and become some of your dream. We have to build capacity. So that's why we did it this way. We're doing it this way. So all of this will come to you when we, as soon as we end today. I'll have everybody's info and I'll email out to everyone because we have the materials. Just wanted to give you that hope and encouragement. Stay with this process. Maybe we could do, Mello, we have this bonus sessions. I have 2 scheduled, but I have one that I haven't scheduled. So maybe Debra and I could lead a session on the grant search, and how to put your team together and doing some of this getting ready to get the money, okay? Because it's getting ready to get the money and understanding, being grant ready, what that means. And then the mechanics, maybe we do something like that. Because this is the season. There's going to be some great opportunities. And if you can quickly apply what you're learning, this is the test here. Can we apply what you're learning from us, the tools that we give you? Can you use them? Can you adapt them? Can you innovate on them? Can you make them your own?
That's what we're literally at the place right now. We have identified the California state grants and federal grants. It's just the time to fill it out. The questionnaires, that's time consuming. And that's the aid that we're requesting because of that.
It is very time consuming. Yeah.
It is. And we're going to help you build those teams. What I'm trying to do now through the COVID, we were able to get interns from some of our local universities. And so I think that's one of Lamb's skills. We've become pretty good at engaging public health schools, departments, and getting those interns. And maybe I'm talking with some of them now. How do I transform them into some of our writing teams? Because that's what you need. You need a team of folks who can just go in to the online portals and upload all your stuff. Right? And make sure that that's a job in and of itself. And then like what Debra said, writing everything out so you have a timeline. We started here and every day, and then someone translating that into a Word document or some other kind of document. Yeah, it's labor intense. So you're right. You're absolutely right. But we're going to help you get there.
Thank you.
I'm glad to hear that it's relevant. We weren't sure, Debra and I, we went back and forth like, what do you think? I hope this makes sense. I'm glad to hear that it sounds relevant. So we're on the right track. Praise God for that. Yay.
Hey, Cheryl. Cheryl.
Yes.
I think
this is Cheryl. Hi, Cheryl.
Hi, Cheryl from Community Reflections. Hello, everyone. I wanted to share with you, I think you guys touched on the subject of payroll and not having ADP affordable to most of us. But when I had my small business a few years ago that I had for 10 years, my payroll was done by Wells Fargo Bank. I know a lot of people kind of frown on them, but I had a very good relationship with them as far as payroll. So, it was excellent. I never had any problems, no problems with my taxes of any kind. So they are a good source for payroll.
Okay.
Great. Thank you, Cheryl. So you guys heard that. Make a relationship with your bank. Go in, sit down, talk about, could you provide my small business, my nonprofit with this kind of support? And very good. Thank you, Cheryl. Yes.
I actually have a 20-year relationship with Wells Fargo. That was including with my payroll, and I had no problems whatsoever.
That's pretty awesome. That is wow. Okay, well, we're coming towards the end, and we have one more document. I'm paying attention to the time because we don't want to lose you. We want it to be just right. And so if you're thinking about something, if you have some questions, let us know, drop it in the chat or get to us. And then before noon, after that, I'm cutting off. I have to do laundry. Yeah, I hate it. But I gotta do but I gotta do it. Yeah, nothing fun and sexy after this, just boring chore.
Welcome to my world.
You know, but at least we'll have something to talk about, right? So I just learned some cool stuff. That's what I told my sister. I gotta tell you some of the stuff I learned today. So here's Deborah. I put up the 6 facts about the gifts to charity, and this is important for all of us because we're all taking donations and yeah. But here's some FYI. Did you want to cover some of these, Deborah?
Well, we covered them.
You covered these? Okay.
But this is so that you have it handy.
Okay.
And some other information about the gifts.
Okay, wonderful.
Now there is another document that's a self-assessment.
Oh, you want me to put that one up? Okay. Yeah. Yes, I will do that. And then, hold on. Let's see, where's the self?
Yeah, one of the things that recommend for a board to do, whether you're a new nonprofit or you're an established nonprofit, is to do a self-assessment of where you're at. Either you don't know, you have achieved it, is partially achieved, or is fully achieved. And this would be like, do you have internal controls? Do you have a mechanism for checks and balances of your cash coming in and expenses going out? And if you go through this checklist, it's several pages long. If you go through the checklist and you work with your board members and your staff to see where your status is, it will enlighten you as to what information you need to get out there, what things you need to do, and what you've done well. One of the things that you want to make sure is that your board members are fully informed. You want your finances to be transparent. And with the board being governance, they need to know exactly, like, say, for instance, 4A, the authorization functions for purchasing, signing checks, adjusting accounts, and extending credits are not performed by individuals who also perform recording functions, such as disbursements. So you want someone who is taking in the money to ideally be separate from someone who is issuing the money, so that you have that check and balance between the two of them. Sometimes you don't have enough staff to do that, but it could be that working with the board and working with staff, you have staff taking the money in, and maybe they write up the disbursement, but it's the board that approves the disbursement so that they're aware of what's going out. The other thing is if in an audit, the auditors come and ask any of your board members, are they aware of such and such a stuff? You want your board members to be informed. You don't want them sitting there going, I don't know. I don't know if we have that kind of policy. I don't know what how we track that, or how staff, record their time or anything like that. The biggest trouble is when you don't have at least dual signature on checks. A lot of agencies may have required, depending upon the expenditure, 3 signatures, but you should at least have the executive director and perhaps the fiscal officer, or you should have the president of the board and the treasurer or secretary, actually the secretary of the board, because typically the treasurer is the one that's preparing the check, and you want someone other than the person preparing the check to be the signator on the checks. But this keeps fraud at bay. You don't want one person just signing the check, because you want to be able to have that accountability that the checks are being written for the right things and that there was approval for that check to be issued. But this self-assessment is really good, along with the, and we don't have to put it up, but is one of the handouts you'll get, is a template on internal controls and what some of the recommended policies should be.